Also, investors were so negative that I've got charts going back to the 1970s, the AAII Investor Intelligence Survey. It was the most negative since 1970 or something crazy. So usually when all of those things happen and we've got liquidity returning, markets are pretty positive. So I love this series because I think everybody's looking that way, and that usually means the opportunities to look the other.
After Bitcoin hit a yearly high of $21,095 on January 13th, where is it headed next? Bitcoin is currently witnessing an uptick in bullish momentum after the Positively Perceived Consumer Price Index, or CPI report, was followed by a strong rally across the crypto market. The recent rally in Bitcoin is creating increased volume levels and higher social engagement on whether the price is in a breakout or fake-out mode. Hello and welcome to Money Talks. In today's video, Real Vision CEO Raoul Pal updates about his outlook for Bitcoin in 2023. Raoul also breaks down the importance of regulatory clarity in this space and how it will drive the future of institutional adoption in crypto.
I'm actually very bullish. Now, the recovery from a bear market either comes two ways. Either it comes up, corrects, and then eventually goes, or it comes sharper. It depends on central bank action, liquidity, that kind of stuff. But if I look forward, I'm very bullish because we've just gone through the rate cycle, so that's out of the way. So we've got the downside rate cycle. It might stick somewhere in the middle, which I don't think they will, but let's say the consensus is right. It's the rate of change that matters. The rate of change comes down first, then sticks. So that's good for risk assets. We've marked down everything in value and price. So therefore, the probability of a risk-adjusted return on and then we've got, I've been talking about this a lot, the exponential age technologies. We were talking about Tesla, but, anybody's been paying attention has seen what happened to AI. It went from me interviewing Emad to say, oh my God, this is coming, to ChatGPT, to everyone thinking, oh shit, we're out of a job within 3 weeks. I mean, that ChatGPT went from 0 to 1 million users in 4 days. There's nothing like it. And it keeps crashing with so many users on it. So that's the technology, and we've got tons of these coming.
While the market is still technically in a bear market compared to last week, investor sentiment is improving. According to the Fear and Greed Index, a crypto-specific metric that measures sentiment using 5 weighted sources, investors' feelings about the market hit a monthly high. Bitcoin price is now above the psychologically important $21,000 level, and many analysts and traders are issuing their thoughts on where BTC price could head next.
So Tesla doesn't have its own dealer network. So really, to manage inventory, they can't ram it into the dealers. So what the other car companies do is give them cheap loans and ram the inventory into the dealers and let them deal with it. So what's happening here is they have to deal with their own inventory. So I think it's the right thing to do because, the price of secondhand Teslas has been falling, as all secondhand cars have. And so to stimulate demand, if they're able to do so directly, why not do it? And maybe they gain market share from it. But it proves the point, and it's the point that even Elon Musk was making, is the inflation picture turned a while ago. I mean, I remember him in the summer saying most of the basket of stuff we're buying is down 50% from the high. And everyone's like, no, it's not, But so I think what we're seeing from this is, if you think of what 2 businesses of Elon Musk, one is Twitter, one is Tesla. What has he done at Twitter? Laid off tons of staff. And what has he done at Tesla? Cut prices. That's a recession for you, right? That's exactly what recessions are all about. That's exactly what the Fed want to see. They want to see prices come lower. They want to see a rise in or a lowering in wage demand. So, it's kind of exactly as the framework that you and I have been looking at for a while, which is, recession's coming. And I've lost count of how many, particularly tech companies, have done this now. I mean, it's just endless. I mean, everybody's done at least 1 or 2 rounds or 3 rounds of cutting headcount costs. And prices generally, we've seen discounting. And remember, I think even you and I talked about this. There was a massive rebuild in inventories. excess inventories that were carried into the end of last year. And you kind of knew that after Christmas, anything they didn't sell was going to have to go out the door. And so I think we will see this everywhere. So I think it's a lag. I think Tesla's such a favored stock that it's actually lagged. So what I've been looking at is what I call these exponential age stocks, these kind of big technology companies that are sitting on top of exponential adoptions of technologies. And in Tesla's case, it's EV, it's AI, it's robotics. I mean, they've got like 5 of them embedded in the business. But all of these, when you put up a log chart, so Amazon's a beautiful chart. Since its beginning, it's been in the log channel since it launched. I mean, it's incredible. It's because it's a network adoption stock. So most of these stocks have all gone down to 2 standard deviations oversold. You know, I put this regression channel that's easy to do on Bloomberg, and they've all got 2 standard deviations oversold. Tesla was the one that wasn't anywhere near it. And then it formed that head and shoulders top pattern and puked. And, you know, the bottom of the channel is about $100 and it pretty much touched it. So, you know, have we got to the kind of levels where Tesla's bad news is in the price? Probably.
Bitcoin price has yet to recover from its pre-FTX levels, but reached above $21,095 on January 13th for the first time since November 8th, 2022. Despite the strength of the recent rally, some analysts believe BTC price needs to remain above the $21,000 support before the current bullish trend can be sustained. According to Glassnode analysis, a renewed bullish trend that started on January 1st drove Bitcoin to the 18.6 to 18.9K level. Yet, a crossover to 19,000 is necessary to claim a new trading channel around 19 to 21K. Resistance is expected around these levels as Bitcoin faces a mid-term downward trend. If the price fails to break over the trend line, we expect a retrace toward the 16 to 17K area.
And I then went through the rabbit hole of listening to long-form Elon Musk interviews to say, okay, what is this man really about outside of the Twitter noise? And I came away, I was surprised. You know, when you hear him talking about artificial intelligence, self-driving cars, rocket engineering, you know, all these things. I mean, his knowledge is not superficial, put it that way. I mean, extraordinary. So in the end, I'm actually more of a buyer of Tesla than a bear. And, you know, I'm biased. I mean, I've got a Tesla Model X Plaid and it's the best car I've ever had. It's an extraordinary piece of engineering. I've been pretty consistent with our views on what's coming, and nothing's really changed because it was baked in the cake. I mean, 9 months ago, the economic data, and we've just been tracking that path. You know, all the forward-looking stuff that both you and I use, business cycle forecasts have given us the calling of a recession for a long time ago now, and we're now playing out the latter parts of it now. Yeah, we can argue and debate how long and how big it is now, but I'm hearing more of this kind of mild recession, soft landing calls from people, and I don't know. Really, I don't really see that. I see short and sharp, and we'll talk about that later in the second half, but I don't really see the mild element. Maybe it's to do with, you know, if we go back to 1980, the Volcker one, right? Everyone talks about that as like this terrifying recession. It was actually a really mild one. And the S&P went down 28%, and that was it. It was kind of over and done with. So maybe there's something to do with nominal versus real. That means that prices remain, you know, demand remains higher because of nominal.
While traders and technical analysts are not known for accurately predicting how long a bull or bear market might last, independent market analyst Hornhair cited historical data from 2015 to estimate how long it will take for Bitcoin to hit a new all-time high. The bull market from 2015 to 2017 lasted for 1,064 days, matching with the 2018 to 2021 bull market, which lasted the same number of days. If traders match the bear market that followed between 2017 to 2018 and 2021 to the current market, it would take 1,001 days until Bitcoin reaches a new all-time high. Despite the current conditions and the strength of the current price breakout, Bitcoin has proven many technical analysts wrong in the past. Risk-averse traders might consider keeping an eye out for increased trading volumes at higher prices as an indicator of whether Bitcoin is finally back in a bull market.
Yeah, but a lot of the direction is that the inflation weight is less, and therefore the rate of change of interest rate increases. The Fed are making it pretty clear they're probably going to go to 25. So it's, as you know, in global macro, it's the rate of change that matters more than anything else, not the absolutes. So if the rate of change changes, all of these beach balls start popping out of the water that have been held down by the heavy weight of interest rate rises and that rate of change. That's all gone. So suddenly, emerging markets go up, gold goes up, crypto goes up, equities go up. That whole story. I don't know what the BOJ is doing. I've kind of lost track of them. I almost kind of, I know it's a bad thing to say, ignore it, because people over focus on Japan. And in the end, it's still pretty contained. It's not like they're going to let rates go to 2%. So, and are they going to, I was having this conversation with Julian Brigden earlier on the Insider Talks, are they going to let it all go and just give up yield curve control and walk away? I mean, no, they've just widened the band. Why would they suddenly decide, oh, you know what, we're just going to let interest rates run wild in Japan now and completely destroy everything? So, but interesting market overall. I mean, it's been a very risk-on week. The question is does China coming back into the world economy mean anything yet to the global economy? My tendency is to think that China, again, we'll talk about this later, the Chinese credit cycle, the Chinese money supply tends to lead currently the Western world by about 12 months. So I think if we're thinking of what's happening now, then we've got a 12-month lead time before it starts filtering into the rest of the world as well in some respects. So, and the rest of the world, the impact on the rest of the world, people are like, well, China's opening commodities. It takes time because the Western demand is still going down. So it's really going to make a difference to the commodity market that so many people are looking at is when all three engines are firing. Europe, China, US. When those three fire, then you've got a potential long-lasting commodity rally. But without it, you've still got one or two of the legs of the stool missing.
So, is it a good time to invest in Bitcoin? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.